Welcome to Yaqzan. So now our group is going to present the situation for part B. Before that, I'm going to introduce myself and my group members. So for myself, my name is Divya. The second one is Mariam Sofia Yasmin. The third one is Muhammad Abdul Azim. The fourth one is Muhammad Aidil Iman. The fifth one is Muhammad Iris Hazik. The sixth one is Noor Adriana Safia. And the last one is Sofia Salmi. So these are the introduced for my members. Now one of my member is going to present about their part. Thank you.
Assalamualaikum, my name is Muhammad Aidilman bin Azri, UDE 180075. Now we will present part B. In part B, we have a question which is start with Aidil, Erin and Azim are good friends that started a partnership in 2010. The partnership business in manufacturing teddy bear product, and the partnership business were called soft ties. The accounting period ended on 31 December every year. For the year ended 31 December 2018, the partnership net income is RM 450,000. The below table is about the partnership agreement signed by the partner on 1 January 2010. The profit and loss distribution based on ratio given, which is for the capital contribution for Aidil is 60,000, Erin 60,000, Azim 40,000. And for the interest on capital, Aidil is 4, Erin 4, Azim is 4. And monthly salary, Aidil get 4,000, Erin 3,500, and Azim is 3,000. For monthly private expenses, Aidil 200, Erin 200, and Azim is 250. And for the profit sharing ratio, Aidil 6, Erin 2, Azim 2. Thank you. Next, I will pass to Azim.
As a sole proprietorships, however, Azim's place has been replaced by Sofia on 1 October 2018, and the partnership agreement remained the same for Aidil and Erin, except for Sofia on the capital contributions and the salary. So for the capital contribution for Aidil is 60,000, Erin 60,000, and Sofia is 20,000. For the interest on capital is Aidil, Erin and Sofia is 4, and monthly salary for Aidil is 4,000, Erin 3,500, and Sofia is 2,500. And for the monthly private expense for Aidil is 200, and Erin is 200, and Sofia is 250. And for the profit sharing ratio, for Aidil and Sofia is 4 and Erin is 2. So continue to the Sofia Salmi for the next questions.
The year ended 31st December 2018 was 7,800. Second is the partners did a training program for their employee which been approved by the government to develop and upgrade the skills of their employees. So the cost is 12,000.
My name is Muhammad Iris Hazik Ibn Juhaidi. My matrix number is CDE 180086. Okay. Now I will explain for number 3 and 4 for the additional information. Okay, for number 3, there is a disability worker in the partnership business and will be giving 6,600 ringgit. The partnership earns rental from its subleasing unused office space to a third party for 8,800 ringgit every year. Okay, for the number 4, Aidil and Erin work together on artistic work because both of them enjoyed doing it as a hobby. Okay, they sell their work to a publisher and their work immediately achieved a general popularity. Okay, the publisher made a fortune out of it. They receive royalties income for 30,000 ringgit from the publisher. Okay, that's all from me. Thank you.
So moving on to the fifth point, which is approval donation. The partner contribute 25 units of the clinical thermometer, which was imported from USA, worth 2,000 each, to Life Care Diagnostic Medical Center on 6 June 2018. This was approved by Health Care Facility. The partner donated cash worth 30,000 to National Paralympic Committees 9 December 2018, and this also which was approved by sports body. So the sixth one is Ideal bought material handling equipment for private use in 2010. However, the equipment was bought into the business for store all the raw material in a safety way in basis year 2015. The net book value of the equipment was 150,000 and the market value was only 100,000. The partner decided they wanted to dispose the equipment because it is been long time usage and some technical problem. On the year ended 2018, the selling for disposed is 10,000. All the partner will claim any changes being made. So this is called capital allowance. So for the seventh point, Idil, Erin and Azim did a complete medical checkup. Total bill is 2,550. However, Sophia bought life insurance worth 3,600. So that's all from my part. Thank you.
Hi, Assalamualaikum. My name is Nur Aidana Safia binti Zarudin and my matrix number is UDE 180111. So I'm going to proceed with the calculation of provisional adjusted income. So as you can see for the table of computation of adjusted income and divisible income for partners, the net income for the company is 450,000 ringgit before we add up with non allowance expenses, private expenses of partnership, and we minus with non-taxable payable. Alright, so for the non-taxable non-allowance expenses, there is depreciation asset which cost 7,800 and donation approved by healthcare facility that cost 50,000 ringgit, and also there is donation approved by sport body which cost 30,000 ringgit. Alright, so for the partner salary that consists of Aidil, Erin, Azim and Sophia cost 124,500 ringgit. And for the interest on capital of partnership is 9,300. And for the private expenses of partnership also is 7,800. If we total up the non-allowable expenses and private expenses, it will cost 229,400. So for the non-taxable payable, it will cost 56,800 ringgit. Okay, so the provisional adjusted income will be 622,600 ringgit after we plus with non-allowable expenses, private expenses, and minus with non-taxable expenses. Alright, so for the total provisional adjusted income, we will minus with partner salary, which costs 124,500 ringgit, and we minus also with interest on capital, which costs 9,300 ringgit, and we minus also with private expenses that cost 7,800 ringgit. So the total of divisible income is 481,000 ringgit. So that's all for me. Thank you.
Alright, so I'm gonna talk about the softest charitable income. First thing first, we need to know the divisible income. So the divisible income is 481,000. For 1st January until 30 September, 9 over 12 times 481,000. So we're gonna get 360,750. After that, 1st October until 31st December, also we need to times with 481,000. So we're gonna get 120,250. Alright, so and then add the partner salary, interest on capital, private expense, so we're gonna get the adjusted income For adjusted income for Ideal is 318550. For Erin is 144200. For Azim 103200, and for Sophia is 56650. And then we need to minus the capital allowance, and we're gonna got the statutory income. For Ideal is 315550. For Erin is 141200. For Azim is 103200, while for Sophia is 52650. After we get the statutory income, we need to add rental income, royalties income. After that, we're gonna get the aggregate income. So aggregate income for Ideal is 326350, for Air is 15200, and for Azim is 107520, and for Sophia is 55530. And then we need to minus the donation healthcare visit because it's approved, and for donations property because it's approved. And then we need got the total income for Ideal is 318350, for Air is 144000, for Azim 106520, and for Sophia is 47530. After we get the total income, we need to minus our personal relief, which is medical checkup and life insurance. So after we minus the personal relief, we got the chargeable income. Chargeable income for Ideal is 317850, for Erin is 143500, for Azim is 106020, and for Sophia also we got 43930. So that's all from me for chargeable income, and thank you so much for your time to listen our questions for our divisible income and for our chargeable income. Have a great day and thank you.